was on the wing like Nero, now I'm getting money like Robert De Niro. Pounds, dollars, euros, respect this thing like a pharaoh. Need a 1,0. 00, wait, 00, no.
Yeah, what's up, people? First, before I start, I would like to welcome you to NIGERIANFX YouTube channel. And as you all know, this is our first video here on this channel. Before I go further, I will just want to implore you to please like this video, subscribe to our channel, and also share with your friends. So basically what this channel is going to be about is going to be about educational forex content, just like you know how we do it. So today we are going to be talking about forex. We want to know what forex is, we want to know what it means to trade forex. So without wasting your time, I will dive right into it. So yeah, we have the topic, what is forex? What is forex? I'm sure you must have heard about forex one way or the other. Probably you hear people say it, or probably you read it up somewhere on the internet. So you might be wondering what really or what exactly is this forex you guys are talking about. And if you've never heard about forex, well, congratulations, you are in for the first time. And today I'm going to be trying my best to try to explain and make you understand what forex is. So let's go. Okay, so forex is actually derived from two words, and those two words are foreign and exchange. So forex is coined from two words, foreign and exchange. So you can say that the FOR in the word forex means foreign, and the EX in the word forex means exchange. So what does this tell us? Forex just simply means an exchange, a foreign exchange. That's just literal meaning. So let me give you an instance. If you have ever exchanged two different currencies, whether you bought or you sell, you have done a forex transaction. So that is pretty much what forex is about. So let's assume that you had a relative that visited your country. That relative does not live in your country. Let's use Nigeria and the USA for example. So let's assume that that relative of yours lives in the US while you live in Nigeria. So she came down to Nigeria to visit, and on visiting she handed you a $20 note as your Christmas gift. And she's like, okay, oh, my cousin, or sorry, my niece or my nephew, I'm giving you this $20 note. Use it to buy whatever you want to buy and enjoy yourself. You cannot spend that $20 note here in Nigeria because the dollar is not the legal tender in Nigeria. The legal tender in Nigeria is the Nigerian naira. So in order for you to spend that $20 note, you have to exchange it to naira. That is, you have to change the dollar, the $20 note you have been given, you have to exchange it to naira. So, and if you are exchanging it to naira, you need to get someone who is also going to exchange their naira for your dollar. So now you are exchanging your dollar for naira. You need to get someone who will also exchange naira for your dollar. So it's an exchange. So you have a need, and the person also exchanging to you also have a need. So you guys meet up in the marketplace and you exchange those currencies based on the current rates that the market provides. So that is just pretty much what forex is basically. So it's a foreign exchange. All right, let's move on. What we have here next is okay, so I'll talk about the forex market as the largest trading market in the world. Yeah, the forex market is actually the largest trading market in the world. We have different kind of financial market. We have the forex market, we have the stock market, and we also have the cryptocurrency market, which is currently booming at the moment. So but the forex market is still the largest market in the financial world. And in fact, this image I have on my screen is not even updated. As of today, about 6.6 trillion naira transaction happens in the forex market on a daily basis. About $6.6 trillion transactions go on on a daily basis, exchange hands and all that. So now, as you can see on this chart, you can see how big the forex market is compared to the stocks market, compared to even the crypto market. The crypto market, I think currently the crypto market cap, or yeah, the crypto market cap is currently less than $3 billion. So now let's move further. We talked about Forex being an exchange, right? And when we talk about exchange, an exchange is done in pairs. That is, what I mean is that in order for you to exchange something, you have to give something to collect something. I don't know if that makes sense. So you have to give in order for you to get. So that's the way it works. So, and because there are two sides, there is the giving side and there is the receiving side. So it's like a pair. It's like a pair. So that's why Forex is traded in pair. So for example, on my chart, on my screen, you will see that I have the EUR/USD. So what this means is that we have the euro against the United States dollars. So that is a forex pair. So if you see this, what this just means is that you want to know the equivalent of the euro against the US dollars. You want to know how much €1 is worth, or how much €2 is worth, or how much €3 is worth against the dollar if you are exchanging it for dollar. So this is an example of a forex pair. The euro USD is an example of a forex pair. So let me give one more example. One more example of a forex pair. Let me give an example we can all relate to. So the Nigerian naira against the US dollar is also a forex pair. The NGN/USD is also a forex pair. So now, because we have a pair, we have to identify the role that each of those currency play in that pair. So now we have the base currency and the quote currency, and as you can see based on the illustration I have on my screen, the base currency is the first currency, while the second currency is the quote currency. So there are other terms that you can also get familiar with, like the bid price and the ask price, the spread and all that, but I won't be going into that in this video. I will be leaving that for another video where I'm going to be talking about them in details. So just have it at the back of your mind that Forex is traded in pairs, and as a result, we have to understand the role that each of the currency plays in those pairs, which now led us to identifying each of those currencies by their proper names, which is the base currency and the quote currency. So for example, if I have the NGN/USD, the NGN is the base currency, while the USD is the quote currency. So now I'm going to be talking about how Forex is traded. We have established that Forex is traded in pairs. Another thing you need to trade Forex is you need brokers to trade Forex. So let me go back to that illustration I gave about your aunt that doesn't live in Nigeria coming down to Nigeria. Sorry, I'm using Nigeria as an example because I am a Nigerian. So if you are not a Nigerian, forgive me. You need brokers to actually trade Forex. And now let me go back to the example I gave earlier with the aunt that does not stay in Nigeria coming to Nigeria. So now in order for you to exchange that dollar, that $20 note you were giving, in order for you to exchange it for naira, what you have to do is you have to sell it to someone. That is, you have to sell the dollar to someone and get the naira from the person. In the forex market, that person can be likened to what we call a broker. So you need a broker to trade forex, because you cannot just buy and sell into thin air. You need someone to sell to, you need someone to buy from. So this is where your broker comes in. The topic about forex brokerage is actually extensive, but for the sake of this beginner video, I'm just going to be scratching it on the surface. So just have it at the back of your mind that you need a broker to actually transact your forex deals with. So if you want to buy, if you want to sell, you need to go through a broker. And on my list, you will see some names like Alpari, you see FX Pro, Odd Forex, Oanda, FXTM, Forex Rebate. These are all examples of brokers, but you have to be careful out there because there are a lot of scam brokers out there who just want to take your money.
Run.
Who want to what? take your money. So you have to be very careful. So do your research, go online, read reviews about brokers, and you can now decide which broker suits your trading, or which broker you like to go for. So the next thing we are going to be talking about, the other piece of the puzzle which you need in order for you to trade forex. We've talked about the fact that you need to select a pair to trade, and not just that, you need to get a broker to buy from or sell to. The third important part of trading forex is what we call the trading platform. You need a trading platform to trade forex, and there are three major trading platforms that I am aware of. There could be more, but these are the ones that I'm familiar with. We have the MetaTrader. So MetaTrader, currently we have two versions of MetaTrader. We have the MetaTrader 4 and we also have the MetaTrader 5. So the MetaTrader 4 is the old version, which is still the most commonly used trading platform, even though there has been an upgrade that has bettered MetaTrader 5, but most people still prefer to use the MetaTrader 4. Like myself, I still prefer to use the MetaTrader 4, probably because I'm used to it. So another trading platform that we have by which you can trade forex from is the TradingView. So TradingView is like is a modern trading platform, equipped with all the tools you need to actually trade successfully. And another one we have is CTrader. CTrader is also a trading platform, but personally I've never used CTrader, but I have used MetaTrader and I've also used TradingView. So this is these are the examples of forex platform. What is the role of a trading platform? The role of a trading platform, just like the name implies, is like a software which you need to trade with. For example, people that probably edit photos, or people that probably do graphic design, you need an app, you need a software, so to say, in order for you to get the job done. And an example of such software is a Photoshop. So the same thing applies for trading. You need to trade, and because you need to trade, you need an app to trade. You need an app on your phone, you need to download it on your PC, you need to download it on your tablet to trade from. So that is where the trading platform comes in. So let's not forget, you need to select a pair to trade, you need a broker by which you will trade, and you also need a trading platform. So the next thing we are going to be looking at is the concept of buying and selling. So I know a lot of you must have been saying, okay, forex trader talking about, oh, I'm buying, oh, I'm selling. What does this mean? It's a very simple concept. So when you are buying in the market, when you are buying in the forex market, you are buying with the prediction that price is going to go up. When you are selling with the prediction that price is going to go down. So if you bought at a certain price and price was able to go higher to an higher price, that means you have made profits. But let's assume that you bought, but instead of price going to an higher price went to a lower price, then that means you have lost. So you buy in the forex market with the prediction or with the expectation that price is going to continue going up, and you also sell in the forex market with the expectation that price is going to continue going down. So that is the concept of buying and selling in the forex market. So now we are going to be talking about the big boys of the forex market. The big boys of the forex market, these are the people that really control, not like control, but they are the big players in the forex market. But we can also say they control the forex market because, of course, what moves the market is volume. And what I mean by volume is the amount of money that you can trade with. So if you have a huge amount of money to trade with, definitely you are going to have some level of impact in the market. So this is an example of some of the big players in the forex market. Some people call them the banks, some people call them the market makers. So those are the kind of names you might hear people call these people. These are just some of the examples. We have the Deutsche Bank, we have Morgan Stanley, we have Goldman Sachs, we have HSBC, we have JP Morgan, we have Citibank, we have Barclays Capital, and others. So these are examples of the big boys or the big players in the market, in the forex market. So we also have the central banks of countries. For example, the Bank of England, the Federal Reserve of the United States, the Royal Bank of New Zealand, the Royal Bank of Australia, and all that. So these are the big players in the forex market. So the next thing we are going to be talking about, we are going to be looking at, if you remember earlier, we said that forex is traded in pairs. So, and I gave an example there with the euro against the USD, which we also refer to as euro USD. So now that is an example of a pair, but there are different kinds of pair. We have different kinds of pair. So we have the major pairs, we have the minor pairs, and we have the exotic pairs. So the major pairs are the pairs that have USD in them. Any pair you see that has USD in them, whether as a base currency or as a quote currency, it is a major pair. So example, we have the euro against the USD, we have the USD against the Japanese yen, we have the Great Britain pound against the USD, we have the USD card against the Canadian dollar, we have the USD against the Swiss franc, we have the Australian dollar against the USD, we have the New Zealand dollar against the USD. So these are examples of major pairs. These are examples of major pairs, and the reason why they are called major pairs is because they are traded against the United States dollars. And the reason why this is, or why we refer to them as major pairs, is because the United States has the largest economy in the world. The United States has the largest economy in the world. So we also have the minor pairs. As you can see, the minor pairs do not have the US dollar in them. So the minor pairs are just a combination of other strong economies, of other major economies in the world that are not the United States. I don't know if that makes sense. For example, we have the euro against the Great Britain pound. You will see that in that pair there is no USD, but the euro is a major economy in the world, and the Great Britain pound, and is also a major player in the world's economy. So as you can see, we have other examples like euro against the Australian dollars. You have another example, New Zealand dollar against Japanese yen. So those are examples of minor pairs. So that brings us to the third group, which is the exotic pairs. Okay, now you might want to make an argument that, okay, but I can see some of these exotic pairs having USD in them. If you are making that argument, then that means you are very smart. But I will explain to you why we cannot refer to some of these exotic pairs as major pairs. And the reason is because when we say something is an exotic pair, it means that you are merging a currency from a major world economy. You are merging a currency from a major world economy and a currency from an emerging economy or a developing economy. And some of the developing economy we have in the world is like the economy of countries like Nigeria, Brazil, Turkey, Croatia, and the likes. We have some examples here. For example, we have the USD ZAR, which is the USD/ZAR. So the ZAR is the South African rand. The ZAR is the South African rand. So you will see that the USD is a major economy, while the South African rand is an emerging economy. It is not a major economy in the world, according to economists. So those are the groups of currency pairs that we have. And we also trade metals in the forex market. An example of metal is gold. Gold against USD. The symbol for that is XAU/USD. So XAU means gold. And we also have silver. Silver is also a metal. So the symbol for that is XAG/USD. So the XAG there means silver. So that is that about the groups of forex currency pairs. I hope you understood that. So the next thing we are going to be talking about, the sessions in the forex market, because everything in life works with timing. Time. You have a time to sleep, you have a time you want to eat, you have a time you resume at work, you have time for church, you have time for mosque if you are a Muslim. So everything revolves around timing. It's always essential to understand timing. So the forex market is a 24/5 market, meaning that the forex market is open 5 days out of the 7 days in a week. The only time you will not find the forex market open is on Saturday, the whole of Saturday. You won't find the forex market open, and on Sunday. But on Sunday night around 10 p.m. or 11 p.m., depending on the daylight saving timing, the forex market opens. The forex market opens every Sunday at 10 p.m. 10 p.m. 10 p.m. is Nigerian time, 10 p.m. Nigerian time, which is GMT plus 1, 10 p.m. or 11 p.m. GMT plus 1. That is the time the forex market opens on Sunday, and it also closes on Friday. On Friday also it closes by 10 p.m. or 11 p.m. GMT plus 1, which is Nigerian time. So now let's look at the image I have on my screen. We can see that we have four major sessions. We have four major trading sessions that has been highlighted here. We have the Sydney session, we have the Tokyo session, we have the London session, and we have the New York session. So the first session in the day is always the Sydney session. So the Sydney session, Sydney is in Australia. So the Sydney session starts by 21 o'clock GMT. 21 o'clock GMT is when the Sydney session starts. So the Sydney session runs from 21 o'clock GMT all the way to 5 o'clock GMT. And we can also see the Tokyo session. The Tokyo session opens an hour before midnight GMT time and closes by 7 o'clock GMT time. So the London session also opens by 7 o'clock GMT time and closes by 15 o'clock GMT time. The New York session opens by 12 GMT time, 12, and closes by 20 GMT time. So these are the timing of individual trading sessions. So now we can see one more thing. One more thing we can observe from this image is that we can see some overlap. We can see, for example, here that from 23 o'clock GMT time to 5 o'clock GMT time, there is an overlap between Sydney session and Tokyo session. And also here we can see from 12 o'clock GMT time to 15 o'clock GMT time, there is also an overlap between the London session and the New York session. So in as much as we have sessions, each sessions are more active than the other. For example, the most active session, or the session that has the most trading volume, is the London session. Yeah, the London session, followed by the New York session, followed by the Tokyo, and then Sydney. But the most active trading time, or the most volatile trading time of trading period in all this session, is this London and New York overlap. Because the reason why it is so is because the London is the session with the highest volume, followed by the New York. So these two are the major trading sessions. So when you have an overlap of the two major trading sessions, you know what to expect. You should expect more activity, more volume. A lot of people are trading around that period of time. So we call them the London and New York session overlap. So that is that about the forex trading session. If you have any question, you can drop a comment in the comment section, and we'll definitely see to it that we answer your questions promptly. Thank you. All right, so that brings us to the end of the first part of this beginner series on forex trading. So we have been able to establish the meaning of forex. We have also been able to establish how forex is traded. We established that forex is traded in pairs, forex is traded through a broker, and forex is traded on a trading platform. And we have also explained the concept of buying and selling. We have also talked about the big players in the forex market. We have talked about the banks, the central banks, the HSBC, the JP Morgan, and the other big players in the forex market. We have also established the groups of currency pairs that we have, the major pairs, why they are the major pairs, the minor pairs, the exotic pairs, and we have also talked about metals being traded in the forex market, metals like gold, metals like silver. And finally, we talked about the forex trading sessions. We talked about the most active sessions. We talked about the London and New York overlap being the most volatile or the most active trading period in every day. And we also talked about the fact that forex market is open 24/5, which is 24 hours a day, 5 days a week rather. So that brings us to the end of this video. I hope that you enjoy this video and are able to learn one or two from this video. So if you love this content, please support our page. We are still young and we are just starting up, so we want to grow. So please like this video, subscribe and turn on post notification so that whenever we have a video uploaded, you'll be the first to get a notification. So bye for now, see you in the next video. Peace out.